welcome to this week's M3 class. Another shakeout. These are very unpredictable markets, and so I am out. I've just put out a emergency sort of exit video. Hopefully, a time to watch that. I'll cover that here today. Bitcoin's down around 1,600, and we'll unpack in a minute the war, whatever. But the chart here is just clearly we rejected at this upper trend channel, and the bear flag very much still intact with that measured move down to the 50K range. So not to repeat myself, but our base case has been for some time now that we would continue to push down, and the pattern here showing that. So the bear flag would be this portion. This is a continuation pattern of the bear flag. And if we were to redraw that here quickly again, in case if you're new, the bear flag was this. It's kind of a bullish trap bear flag, similar type of patterns. So when we see this as the flagpole, it's the opposite of a bull flag. The measured move on that, if we clone that line, is generally something like this, or the break point. So I do think this is playing out. This is a rough rendition of it on the weekly time frame, rejecting, putting in lower highs. And so while yesterday we were bullish, or last week we were bullish, kind of looking like we'd put in a bottom, and we're going to get to some news in a bit. Some people speculating that at textbook Bitcoin, bottom is underway. That should scare you a little bit, because these guys are always wrong. And I think that, just being, investing, trading for 25 years, I can tell you that bottoms usually don't form like this. Usually they form with a final capitulative move. And that is, if you're not familiar with that term, but capitulation is where people throw in the towel and they're saying, I'm done, I'm out. I mean, kind of like I just did today, because I don't want to ride this thing down. If Bitcoin is heading lower, it's going to drag everything lower. I want to point out to the prior cycle, though, as an example. We got down in this area here, and people were calling the bottom right around 20,000, saying the floor is in. And I was watching Camel Finance earlier today. He was making a similar reference back into the prior cycle, even before that, and then it dumps down to 3,000. But I'm using this example. We were right around here, and it had a double bottom, kind of like what we were seeing around 60K, pushed up to the 21-week EMA, and then boom. And people say, well, that was FTX. This time is different. Well, it's usually not different. There's usually some kind of a capitulative move there, and whether it's war fears, whether it's the Clarity Act not looking like it's going to pass, there's another piece of news I want to unpack. But there is a light at the end of the rainbow. And even though we're beat up, we're like Rocky Marciano or Rocky Balboa at the end of the fight, beaten and bruised, but still we can win if we preserve capital. And that's the urgent market alert that I put out today, just to get out of the markets, all of the longs, and wait for clearer signals or a drop down in this range. The buy range would be down here, at least initially, for a tradable bounce. Now, there is a possibility still that it would push up here to that 70K range and go lower, but I really don't think so. And the buyers are showing their hands here, the 49K to 54K. You guys have seen that. I've got a new YouTube video out with 4 or 5 studies pointing toward that level, which we have been covering for weeks. So that's what we want to do. But I want to just point out that the bull market, the time to really be aggressive is when we're back above the 50-week exponential moving average, and then using it as support with the 21-week crossing the 50 here. And that can take a few attempts. But when we start to see, just want to be really clear about this, when we start to see, I'm just going to zoom in, when we start to see the orange line, the 21-week exponential moving average start to base, tighten, and launch, that is when we are aggressive. And I want to restate, there are 3 mentalities or 3 types of trading. You have aggressive, bull market only. We have conservative, which we've been in, where we're catching altcoin swings and short-term base hits. And then there's protective, and I'm moving into protective mode, where we're not doing anything because it's too dangerous. and we otherwise could get whipsawed out as we've been seeing lately. So anyway, hopefully that makes sense to everybody. If you have any questions, there's another indicator I really like called the EMA ribbon, which is free, and you can get it on TradingView. But do you see, we've covered this before, but when the EMA ribbons are wide, we don't really have any confluence. But when they tighten and prices above that, and it uses that as support, like we saw in June of 2023, then those are the times to kind of buy strongly, and sometimes it'll retest. But right in here, obviously, this was a great time to buy. And the key signal and differentiator, as simple as it is, it's a bullish engulfing candle. And that is when the green candle engulfs the prior one. This is some review, but right there, that was the clue. Bullish engulfing on the prior week. Also a weekly ERI balancing out of a buy block. Those signs and signals were there. Then we had another bullish engulfing candle right there, okay, and then another bullish engulfing candle right here. So this is that formative pattern with the EMA's tightening, and we're a fair ways away from that, okay. And also, though, in that time frame, generally October is when these things launch, and that is where the timing window is for when the bear market should be over. So at least in terms of recovery. Doesn't mean that we get to the launch point here. Remember, 2022 is when the bear market actually started to end back in this range and then started to recover. And we were calling this was January 2023 is when I was saying get back in the markets based on a number of things that we saw here. And then it was a full year when we really saw that launch. So we're sort of in this chop zone. We're like, we haven't even bottomed yet. So I want to just set expectations coming into the end of the year for these type of tradable bounces, but taking profits. The big moves probably won't happen until maybe 2027, 2028. Really hard to say. I think the 4-year cycle will accelerate as the Clarity Act passes and as we see all this other money on the sidelines. Certainly there will be some standouts either way, like Solana. If we get Clarity Act passed right now, it's not looking terribly good. But there's some rumblings that they'll get it passed. But there's another regulatory, I was going to say regulative, but regulatory body, something that Vadim shared with me that we're going to unpack here as well. Either way, when in doubt, stay out. But really, just so you can cement it in your mind, this is the gravy train. This is what we're looking for, and we're not there yet. We're still on the left turn portion. So that's why, as much as we want to make profits right now, we have to be really careful and protect our base capital. And you guys should all have a number in mind where you won't go below. And I have mine, and that's where I just exited everything else that I was in. These markets are a bit tricky right now. But again, the roadmap here on a macro scale, we're in a downtrending parallel channel, right? So we have this on that macro side of things. And inside of that, we'll see these counter trend bounces. Let me turn off the ribbon. And I also want to look at our super AI signal here, which is showing 28% bearish on Bitcoin on the weekly time frame and on the daily time frame. It's sort of inconclusive, but I will go back to the daily so we have an idea where we're at in general. But this we've done over and over again. This being the bear flag breakdown, right? From there, measured move. These are an art and a science, but right down in this 50 range. Look, I'm just going to draw it that way. The rejection point at the 21-week EMA. So the clues are here and these lower highs. Now, this can change. We were bullish last week, bullish engulfing candle, but I think, again, we have this overhead resistance up top. So the most likely scenario is, as we come down, we have some capitulative move here, boom, and then we could see this kind of recovery. It won't happen that quickly, but more than likely it won't. But there's a lot of money in the sidelines just waiting for the right time to get back in. So prepare for this. This is my read at this point. And, as things change, we'll let you guys know. I'm going to check a couple other things here. I want to look at the camel cycle indicator and just see where we're at with that on the daily and weekly time frame, because this thing can be very helpful, but it's also helpful in projecting when the daily cycle low will be. All right, and where is that thing? It's still loading. All right, so as that loads, there we go. a bit much to look at on your screen, but I'll just zoom in on this. So this is saying it said the daily weekly cycle was here, and so the fact that we've gone lower now, or fairly lower, means that it was sort of invalidated, but it's showing that this was a daily cycle low, but it doesn't really matter. The projected next daily cycle low would be in this window, as I've drawn this, right? So let me move that over. So time-wise, putting us into the end of July, we could certainly, still run out of this. Anywhere in here, we could see another daily cycle low on the camel cycle indicator, and as that aligns with our other signals, we want to be paying attention. So this is shouldn't be a surprise. I know I've been suggesting going long on some altcoins, and so as of today, with this drop, and because this is rolling over, I want to make a kind of the short version of the video I did earlier today with these early reversal indicators on the weekly time frame. We always want to pay attention to the ERI on the weekly time frame, especially when we have a bearish engulfing candle on the top side. We did here, rolled over. We did here the last week, and we're now getting the ERI looking like it's ready to roll over with the TSI about to cross red. When these align, these are our signals to exit the markets. And as you'll recall, at the top of the market in 2021, we had a full alignment of the ERI, TSI, RSI, and the signal line. And when those all happen at once, that is also a topping call. So I don't want to sit here and armchair quarterback and say, oh, I was right. And we're very good at catching the macro swings. What is really tricky are the interim swings and catching these bounces in profit. We were lucky to make money on Venice token and Dashcoin and Zcash, but these things are very good at faking us out, right? You might say, looking at this on Zcash, oh, it's obvious. But if we go to a bar replay and to basically to back here, let's just replay this. This is a great tool, by the way, all of you can use to train and practice. And so basically you use this bar replay and you drag it to the left, because this makes it look like this is the candle here, bullish engulfing, bullish ERI here, and then down below you can advance this. I would do it on 1x speed, and you can also advance it one at a time, but I'm going to just hit play, and let's see, jump to real-time chat to single forward. Okay, so I'm going to go forward one, look bullish, kind of getting above the 21 and 50, consolidating, looks uncertain, and then we had this sort of breakout, which is why I put the buy on Zcash. But now we're seeing the stop sign on all of these is the ERI triggering like that, and then looking to the North Star Bitcoin. And so now that we're seeing these, I'd like to look at the breakout retest, but we need to see these signals improve. And what concerns me here, and the reason I am getting out, is we're seeing confluence. This will close red end of today, and then we're getting out of the way of the freight train, as it were. So if this goes lower, so you need to know how to read these signals by now. And if you guys have any questions on these, there is a good training on YouTube for that. Just ask, and if we want to, we can do another training on these, because it's so important to use these as your invalidation signals and your confirmation signals. Okay, question, just seeing, would you still have orders to buy at lower prices? Sol at $50, yes. Dash at $30, we'll take a look at it, but certainly the Bitcoin and the 49K to 52K range for sure, but I wouldn't be going all in. Right. So specifically, Michael's asking, would we still have buy orders in at some of these? You could do Zcash right at the midpoint around 300. Long term, that's going to be a good option. But there's a lot of uncertainty, a lot of buyer support all throughout here. So you want to keep some powder dry. Using Bitcoin as the barometer. And let me get the exact chart, because I have a number of these. And the one that's showing the exact buy levels here. And you guys, you have this access to this, and but clearly we're seeing an invalidation of this kind of pattern playing out. The buy levels on Bitcoin all throughout here, the 49K, 50,000 would, if we get there, I would buy all day long. and 51.5, 52.5, 53.7. These are somewhat arbitrary. 54.7 as buy zones on Bitcoin. As far as Solana, now look, guys, this can change if we suddenly start putting in higher lows, and it looks like this is a breakout. We have to admit these may not happen, or they may happen later. Maybe we get a July pump, and then we bring everything down. August, September, generally bad months. October, November, generally very good months. So let's take a look at Saul, which was his question. And, I'm going to slow down here. This shouldn't be a panic. It's just sound investing advice. Okay? It's not a good thing. It's not a bad thing. It's just a thing. And these do cycle out as the market sits out and as we see more rotation into stable coins. Money flows out of crypto. We have the war basically restarted. We were hitting 50 different targets in Iran as of last night. And this thing does not seem to have a happy ending anytime soon. And I think probably traders are sort of speculating, how is this going to affect the midterms and Trump's overall approval rating? All the fireworks in the world can't really save certain things like a gas higher at the pump. And anyway, don't get into that. It was an amazing fireworks. But at any rate, the markets are pricing these things in, and uncertainty, they don't like uncertainty. Solana at $50. I would say I will revise that a little bit. I would be looking and be interested at Solana potentially here. But the thing is, if it went down to this buy block, that wouldn't necessarily be the bottom. On the weekly chart, we usually see the bigger picture, and that's in this kind of down this 50K range. But let's take a closer look at it. The problem with Solana here is it's sandwiched between a large sell block and a buy block. And the patterns here, if we look at if there's a bull flag or bear flag, not so much. It's not a good one anyway. We have this kind of a pattern. If could play out that way. I'm using Bitcoin and the total market cap as the barometer, but if we were to use this as the bear flag, which is similar to Bitcoin and total market cap, and then the breakpoint, that puts us down at $45 and $50 on Solana. So, that's where I would cautiously I would be considering buying down here, but let's put an alert at 65.50. And see what the overall market is doing. I wouldn't be putting arbitrary buy numbers. I'd be putting alert numbers. For Solana, to buy it at $46 at the midpoint, sure. And $50 here, sure. Right in here, not so sure. Okay, and that kind of comes from these other patterns playing out and understanding the overall market structure. And I would recommend going to watch that new YouTube video, and if you do, please just do me a favor, just kind of click and like on that. I'm trying to keep the viewership up, and we want to get some more members in here, even though we're in a bear market. But point is, there are 4 different studies pointing toward confluence in that 50K region for Bitcoin. And so let's look at total market cap and see where that is also playing out. So, the benefit of seeing this over and over again is you will start doing this. And let's see some news here from Senator Loomis. You'll start being able to see these things and see my thought process. You realize a lot of trading is knowing what to ignore. And I'm ignoring everything else. I'm not doing Elliott waves. I'm not doing a lot of crazy Fibonacci's. Leave that to the day traders, things like that. Anyway, I did see this pop up down in my lower corner. Senator Loomis says U.S. will play catch up on crypto regulation without the Clarity Act, basically saying the rest of the world is going to get ahead of us if we don't pass the Clarity Act. So that's nothing new. But what is affecting these markets immediately is MicroStrategy sold 3,588 Bitcoin for $216 million, but it's not really, he's buying billions of dollars in the middle of all this. So I think this is FUD, fear, uncertainty, and doubt. This is just to pay dividends on things that, so I'm going to come back to this, the dividends on the Stretch and the other Strike products, but that doesn't mean, they're doing that to stay current, but they're also going, in the middle of buying of other Bitcoin. So let's see, Mt. Gox trustee has begun on-chain Bitcoin distributions. Oh, I see. So what does this mean? Look how they slid this in here. You guys remember the Mt. Gox hack? It was back in around 2013. I have a friend who had 3,300 Bitcoin on Mt. Gox stolen that he never recovered. Doing the math on that, he would have been worth, I think, 100 million or so. And so tragic, but they were able to recover some of that Bitcoin. And what this means as the trustee has begun on-chain Bitcoin distributions, giving their Bitcoin back to former creditors. So the Bitcoin from back then is so much in profit right now, then likely we'll see more sell pressure. What we're looking for, and a reason to be out of the market right now, is that final capitulative move. We don't know what it'll be caused by yet. What could trigger it? Mt. Gox people who have a lot of Bitcoin just saying, I'm done with all this volatility, and just selling it to lock in their gains. You know, if you got your Bitcoin back after 15 years, 13 years, and you're worth 20 million, even though it's the bottom, you might just say, hey, I'm tired of this. Well, I'm selling it. So that's a concern. Delivering Bitcoin allocations rather than cash for claims tied to the 2014 collapse. Right. So that's potentially on-chain, moving Bitcoin on-chain to sell it. Do you notice how we're leading with it? Look, guys, I say it all the time. Show me the charts, especially with our buy-sell block, and I'll tell you the news. You know, maybe it's Michael Saylor. Maybe Mt. Gox comes in and a bunch of the trustees and the beneficiaries, rather, dump all their Bitcoin, which could be in the thousands of Bitcoin or more, tens of thousands. And that triggers more of a leverage unwinding in the markets. And then Saylor has to. So there's all of these things, or maybe another big hedge fund like Jump Trade, or the one out in Asia that starts with an M. I can never remember it. There's a lot of, there are wounded funds and things like that may have to unwind further. And that's what generally happens at the bottoms. There's a trigger, there's an automatic deleveraging like we saw in October, and then boom, capitulation. Stop losses trigger liquidations, triggers more stop losses, more liquidations. XYZ company blows up. That is a time to buy, and so we'll be watching for that. It doesn't mean it has to happen, but that is the least risk type of move. Okay. Bitcoin shows resistance near the 50-month EMA. We'll look at this. Traders note recent price test, longer-term moving average chart patterns, strategy-driven selling. Guys, we'll look into this on the charts here in a minute. Grayscale, so we'll look at the ETF flows. We're seeing that. I wanted to get to where Cynthia Loomis was saying. It's kind of clickbait down here. It talks about her, and then it doesn't get into this. All right, let's get back. Let me get back to this. So basically, total market cap seeing that same here measured move on the bear flag, the macro bear flag from the 2025 high. Flagpole bear flag measured move puts us down to 1.8 trillion. We have a smaller bear flag within this, also pointing to that range, and so I would submit to you that we are probably looking for more downside. I was hoping for a nice little altcoin bounce, so let's revisit that. And by the way, for those of you interested in shorting, this is Near Protocol. Looking pretty strong as a short here. Resistance down quite a bit. I thought I was in a short on this, and I hit the wrong symbol, so I'm missing out on that. But I don't want to catch the bottom. On the 1 hour, 4 hour, likely to get a bit of a bounce. I'm not going to talk about that here. I did sell out of Allo. Why? The stop sign, the ERI. Okay, we pushed right up to our target, almost to our profit target. I believe our profit target was around 50 cents, the midpoint of the red sell zone. So whenever we're in it, here's a nuance for you guys. And I always try to leave you with one or two teachable moments and nuggets that you'll internalize somewhere. And so when we are in uncertain times or in conservative mode, the sell blocks, if we're pushing higher, these should be used as a zone to sell. And so right at the bottom level, right at the midpoint, and at the top of the sell block are going to be the sweet spots, or even layer them here, 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 and here. You know, exiting in stages like we do when we're dollar cost averaging. So with that, though, Laura did look good here on a couple days ago. We had a rocket right off the 21 day after a strong push and nice money flow. Okay, was a little concerned about this, but I thought because of these strengths we would push up to 50 cents. But alas, we went right up to the lower end of that sell block, which was previously the rejection point. These topping tails rejected, rejected, rejected. So what that meant is these sellers started moving more of their sell orders right to that level around 44 cents. So these are those nuances to pay attention to. So sure enough, we got over to this point. I was busy doing a number of things. I had take profit levels up in this range. I don't remember. I was waiting for more of this. I had my alerts set at 50 cents and felt confident we would see that, but apparently we didn't. So look, we're not going to be 100% right. We need to be on the right side of the trade, though. As of today, the bearish ERI, I sold all of the rest of my Allura, also because of bearish divergence yesterday. And as of today or the next day, we'll see this roll over. Pretty simple stuff. It's not easy. Pretty simple stuff. So Allura, I'm out. Lighter, also I'm out. Bearish engulfing candle as of yesterday with the topping tail. So unfortunately did not see the full move up to the 25% range I thought we would. But again, Bitcoin, it can be the anchor that drags everything down. So I think from here, I'm going to be very cautious in doing any more longs until we see this Bitcoin drop play out, because while we could have been right and Aerodrome may bounce here out of a buy zone in the uptrending channel, here's another nuance. In this uptrending channel here, we failed to get to the upper range of the parallel channel, so it's looking like it's run out of steam and rolling over. But look, these are going to be great coins when this market returns. So we want to be familiar with how they trade, keep them on the radar, and be cautious with stop losses. And I did have stop losses on all my trades and my VIP client trades, but I just went in and exited all these positions because of this. Hyperliquid, red sell zone, red ERI. We didn't have an ERI 2 days ago when I was saying that hype looks good, but here it's clear, lower high, lower high, lower high. So, and now the TSI is rolling over. So all we can do is follow the signals here and just be ruthless, be cautious, and also ruthless in selling positions when the first sign of trouble. And these are those signals. Rejection, underwater, right? Underwater. It looked like it would come back, pull back, and break above. But on this and Dashcoin, we were out of Dashcoin, even though it was in a buy zone. Sell pressure up ahead. The only thing that's outperforming here is Lido, but do not chase this, though. This is almost certainly going to pull back under support, and this is margin-driven traders pushing it up, trying to trick traders into being exit liquidity. One of the things you should always use is your Bollinger Band, which are modified Bollinger Band for crypto, which is unique to Crypto Mastery. And if you're watching this, by the way, a replay somewhere, we might put it up on YouTube. You can learn more about our signals at cryptomastery.org. Cryptomastery.org. These are the backbone of everything we do here. But I would expect this will pull back down and then start to roll over here. Because prior resistance on this trend line, but again, our Bollinger Bands are so good at containing price with the modification in there that we made. So for crypto, regular Bollinger Bands really don't work well for highly volatile assets like crypto. And when the price gets to the extremes, this is a great case point, by the way. Either extreme on the Bollinger Bands, as my friend Steve Nissen taught me, it will revert and ultimately trade to the other extreme. So we got down here, touched the lower Bollinger Band, almost got up, got to the midpoint, but really came down, broke below the lower Bollinger Band. These can be used in confluence with our other signals as buy zones. In this case, this is a bit of armchair quarterbacking. I was not comfortable buying Lido here, although it was on my radar. But our ERI, we touched the lower Bollinger, pushed up from there. Any other signals? We had our TSI and bullish divergence. So these three signals were the sign. And then we saw the rocket in here, and we've now pushed up to the upper Bollinger Band. That would normally tell us this will reverse and will ultimately move back down to the lower Bollinger Band, most likely. At least come back into find support back below here. So we're not buying anything, even though it looks good. Overall market looking very bearish at this point. Zcash, same thing. Yesterday I was bullish on Zcash. I want to be clear. Things can change overnight. This was a bullish move on Zcash, right? And this was the right call to buy Zcash. Consolidated EMAs, breakout above it, right? Above this trend line resistance. And then, but as of today, because of this rollover in Bitcoin, because of things and fears in the Middle East and all these other things, and de-risking, essentially de-risking by the bigger players, it's sometimes we'll be buying one day and selling the next. We don't want to put our head in the sands and pretend it's okay and second guess and rationalize and have confirmation bias. Very dangerous to have confirmation bias in trading. Always be willing to admit that we're wrong and take small stop losses. So here, bearish early reversal signal on Zcash. I'm out. TSI looking to roll over and turn red by the end of the day and likely go below there. So these are the signs to exit. You have to be in the game to win, but you also have to admit when the market shifts. It's not about being wrong. It's not about being right. It's about being on the right side of the trade. So if you did take the Zcash call the other day, I would reverse that and just, when in doubt, stay out. These are our stop signs. Also, Monad, same kind of thing. We, nice strong push up higher, broke the Bollinger Band, looked strong though. I was in a leverage long on this as of yesterday. This was breaking higher. Now this is reverted back down with the overall market. So I'm taking some losses, taking some stops willingly, but we don't want to be riding these things if we're seeing bearish engulfing candles and bearish early reversal indicators, and especially if we're seeing any of these other. So convex, we talked about CVX the other day. The finance sector was looking strong. CVX and Lido Finance and a number of others. This is also our stop sign on the daily basis. Trend strength indicator turning red and below 80. Boom. No emotion. Be out. Take the small stops and be ready for the bigger moves when they happen. And we just never know, though, when they're going to happen. We can set things in our favor. Of course, we did do very well on Velvet here, took profits up in that range, but Velvet hit sell blocks in there. But, we were already out. I was saying take profit on, and it did take profit up here at $2. Hey, look, maybe we'll run this again. But we did 4x on that, bought at 50 cents, sold at $2. It's oversold here, so I do have alerts on when these things start to come back around, and likely these altcoins will be the ones that pump. But I want to be very careful about our entries. Nothing bullish here on Ondo Finance. At some point, I love it. It's a great company, but too much sell pressure up here, and just this probably isn't going to be ready till the fall. Okay. Venice token, we bought that. Look, it's all the way back down at $10. We traded this beautifully, guys. And these are the ones that we want to go heavy on to make up for and give us, some wiggle room on taking stops later. We bought it at 9, sold it at 19 to 20. Some of you sold it at 20. That was perfect. And I was saying, don't buy back into this. We took a couple of other bites at the apple, but as soon as it started rolling over, we were out. And now the uptrending channel is now breaking. So Venice token, I would let that settle out, leave it alone, even though it's up a little bit. So, let's see. Any other questions, guys? You want me to look at anything else? This is tricky. This is a tough time. A lot of top traders just stay out of these markets in this bear phase. And, these skills, and even though it seems manic and even though it seems impossible, these are the skills you need to learn. And especially the indicators. Ethereum, bearish engulfing candle, bearish ERI. Even some of the top trading rooms were long recently and took their stop losses on these. And I won't mention any by name. Sometimes I'll check with them because a few of them can move markets. But isn't this starting to make sense, though, you guys? In hindsight, of course. But we've talked about this ad nauseum. But when price is below this, we're drowning. When price goes below the 50-day exponential moving average in green, especially here, bearish engulfing candle, this is when you're drowning. Over here, we're skating on the thick ice, fell through the thin ice, that 21-day exponential moving average, held at the thicker ice underneath. Just imagine you're out in Sweden skating on the lake and you fall through a little bit of thin ice. But fortunately, some thick ice below. Everything's okay. And it's here again on that thick. Then, but suddenly you're starting to fall through the thick ice. Should you still be ice skating on the lake? No, because once you fall through the ice, you're drowning, and sometimes you come back up and hit your head on these, like here. Guys, it's the best analogy I can come up with at this point, but it's a good one. So you here hit your head, still drowning, hit your head on the ice. Basically, here you're dead in the video game sense, and then you get a new player, but the same kind of thing, coming up, hitting your head on the thick ice. This is not ready. Okay, not ready. So it is a prepare for more downside and more drowning. So Ethereum, you guys know I have not liked Ethereum. I have not recommended Ethereum once in the last year or two. It's an underperformer. I don't like it yet. At some point, I think it will. When they pass the Clarity Act, Ethereum, Solana, and Bitcoin will do very well. But as of now, not so much. Okay, one thing I want to do, and I don't want to miss this or go past it. We want to look at that the USDC, the stablecoin dominance, and let me pull that up here. We'll come back to these, but I think it's important to also be watching the stablecoin dominance, because when that goes up, crypto and Bitcoin goes down, and that is the crash study here. And you can find this updates on this on TradingView, but you guys already know this. We've been following this very well all the way past here, and this yellow zone here is this kind of prior support for the stablecoin dominance, right? And again, as stablecoin dominance goes higher, as money flows back into stablecoins, and this point on this chart, Tether, then that equates to the bear market, right? So the 2022 bear market here, and of course the this chart since 2018, when price was touching this lower range, we were hitting market peaks because it's inversely related. The yellow line here is sort of the median, and price as well as other things revert to the mean, as we can see through here. But since 2018, when stablecoin dominance came down here, we were hitting market highs. Back here, you guys remember January, if we go back to 2017 rather, back here's kind of when it started, but along the way these became the market highs as stablecoin dominance was at the lowest, April of 2021, and then we had the midsummer crash. Money flowed quickly into stablecoins as Bitcoin crashed and altcoins crashed, and then it came back, all the money flowed back into the Bitcoin and crypto here and out of stablecoins, which was that November 2021 high that I called back in October, November, December, and January. I was pounding the table to get out because here we were seeing money flowing into stablecoins. So again, this blue fractal borrowed from here, same kind of thing this time. Although we didn't quite peak there yet, I do think at some point we'll peak up in this for the final crypto crash. This is why I don't think we're not done yet. Of course, the opposite of the bottom of the market as stablecoin dominance peaked. This was, let me move this out of the way, back in sort of June of 2022, and then the end of 2022, November of 2022. Remember, it was December of 2022. We launched Active Trader, and I was saying buy when there's blood in the streets. And then, of course, that was one of the best times to buy, because as of January of 2023, we were starting that buying ascent. The point is, the green fractal is starting to play out again as well, but we have not maybe seen, even though we didn't see the type of crash we did back here, it's certainly setting up to do that soon. Okay, that's what I'm getting at. And by when, these fractal patterns tend to play out similarly, not exactly, but this points to August of 2026. August is usually a terrible month. So I think I submit to you that while July could still be bullish-ish, maybe comes down into here, but then we see a resurgence and another drop going into the August time frame. And trust, this is speculation, but it's good to have a roadmap and a base case to either invalidate or confirm. This is really good stuff, you guys, so make sure you're understanding this. But we have probably a lengthy recovery. After this peak, though, if we do bounce up into August, and maybe that's the 50K low, the capitulation low, then we start to recover, and we'll have buying opportunities here. September of 26, October. This is all lying and in line with the timing of what I've been suggesting. So I think it's a good time to just be out, wait for this drop, and then start buying potentially in August. Maybe we get some pump higher in July. I don't know yet. Historically, when May and June are red, July is always green. So we're in the uncertainty zone, but all along through here, there will be opportunity. And then timing-wise, this puts us in July of 2027 when the bull kicks off again, potentially. You know, these timelines can be accelerated and aren't often exact. So, but the patterns tend to be. So we might zigzag it left or right. And point is, though, we want to be kind of careful here. But this points toward November of 2027, maybe a new market high. You know, that would be earlier than the normal next cycle high. Maybe this gets dragged out. But I do think with Clarity Act passing, money flowing in, wars resolved, you know, these things are possible. But for right now, I want to be clear, you know, that's what I'm seeing, right, as the likely logical next step. Whether it's this is the other scenario, though. Maybe we haven't peaked yet, and you know, this kind of thing still does peak, and then we get a rally going into the beginning, or this is still end of August. So there's these two scenarios here, and but if we were to do this, then it suggests we might see another crash in November. You know, I don't believe that would be the case, but certainly we would get another. We'll invalidate or validate this as we go. It's not going to be exact, but I wanted to point that out. At least we're not in the dark, right? Also here we have the PMI in this top range here, starting to roll over a bit. I did redraw this a hair, whereas before it looked like it was breaking out. And we don't really know which angle to use with this. But down below, more importantly, the U.S. net liquidity and M2 still suppressed. I talked about this in the last video that just went up. The suppression here is certainly keeping prices down. Previous cycles, we've seen increases in net liquidity and M2. Here we saw this push up coinciding with the top, the 2017 top, sort of a little bit. Certainly huge push in money printing and liquidity in 2021, but none of that this last cycle in 2026, below 75, never broke through that. So what will get the money printer going again? Hard to say. We're still pricing in increases in interest rates, because that inflation, that pesky inflation, has really never left the conversation. Okay, let's take a look at this. Again, you can look for the YouTube video that just dropped for a deeper dive into this. All of these pointing toward the 50K range. So we are seeing that. I will just point out that our ERI on a monthly basis for the first time is wrong. Okay, so that's unfortunate. I thought we had discovered something. Now, when I say wrong, it has not been exactly right before. And the earlier versions, you know, it did come back down and retest that month. So the key is that the blue line here and these other lines that these moving averages. So we are still holding the blue EMA, or is that the SMA? Let me just double check that. That would be, come on now, it's this. And the properties there, style, the 50-month SMA, the 50-month SMA, and that was what that other article was alluding to. And then we have the 100-month. Now, these core SMAs, I don't want to get too confusing. We're mostly watching those on the weekly, but this EMA, the input here, the 100-month EMA would be next, and that would be the purple line, and then of course that puts us right down in that 49K, 50K region. The MACD is also suggesting, here's kind of some good early news, kind of suggesting, you know, that we're bottoming, although even after it did take from the bottoming candle here 1, 2, 3, 4, 5, 6, 7, 8 months, 9, 10 months to start really recovering, and that was back into June of 23. But January of 23 was the ideal buy point right in here. That's when our ERI flagged. So I think we're just a little bit early, but I think it's still on par for coming back higher October-ish. Maybe see some green in July, red in August, red in September, October push, pump higher. So we have to stay in kind of conservative mode. You guys, nothing new there. The only other chart here that I would pull up is, let's see. Well, we have, okay, let's look at this one too. Yeah, this is something kind of new that I was watching and I covered in this video recently. The head and shoulders pattern that nobody's really talking about here for 2026. So the measured move, this head and shoulders, left shoulder, head, whether you call it this or that, same, we'll use this as the higher one. The right shoulder, the measured move on that, look at that. This is the other study pointing toward, you guessed it, 53,000. And so let me move this down in this range. Kind of easier to read right there. But so this is valid as well. Let me just do that as the right shoulder. The neckline, if you're not familiar with head and shoulders, left shoulder, head, right shoulder, neckline break is similar, if not generally the same drop from this head to the neckline to the drop target. Okay, so if we were to do this, move it down a little bit less. The slope can be dragged out a bit, but you get the idea. So then art and the science. So we could even draw it like this, okay, for a more symmetrical head and shoulders. They're usually often not. It's either it's measured the same from here to here. These are in your high probability trade setup cheat sheets, by the way, in the M3 Active Trader member area. And again, by the way, if you are watching this on YouTube, you can learn more about our Active Trader group. Attend these classes live every week at Wednesday at moonstream.io/M3. Now is the time to be paying attention and really looking to enhance your skills with our signals and with the classes here that we do. All right, so I think that's about all I wanted to cover here. We've covered USDT dominance. We covered the PMI, Purchasing Managers Index, and net liquidity. Also, this study here. The other one that I was going to touch on here is, might as well pull it up here. It basically says the same thing. Actually, I would go ahead and watch the recent YouTube video. Let me just pull that up because it covers it in more detail and it won't seem as rushed. I do want to get to some news here today. And let me move some of these things out of the way. You can just go to Moonstream Crypto, Google Moonstream Crypto YouTube, right? And that's what that would look like there. And then I'll just show you the next video that once this thing pulls up. And by the way, I do have this pulled up, not that one. If you do want to join our private mentoring and coaching on the get this model portfolio sent out, a little bit of a commercial, you guys. I know most of you are live here with M3, but I think now is the time really need to get the word out for all this. And this is not hitting go. Oh, okay, yeah, click this top one. You can learn more about Moonstream or coaching with me at moonstreamcoaching.com. So we have something for everybody, and some of you I'm working with privately at private clients, and some of you as well are considering it. So here on YouTube, Moonstream Crypto, this video here, the one that just dropped, there's Cartoon Me, and this is already 720 views, and we talk about the 4 studies that are forecasting 50K Bitcoin. I'm holding tight to that. Everyone's saying the bottom's in and we're going higher. I'm still saying even the prior video that came out 2 weeks ago, 9,000 views, you guys. And I talk about this as well and how we predicted the last 3 crashes. So go watch this one here, though, this one that just came out. And I covered this in detail, and that's me in my office studio here. Anyway, but go do that, because it covers the 100, 200, 300 week SMA study in addition to where we're at. So how are we doing on time? Guys, if you want any more coins, let me know before we're done. At this point, I'm going to jump over to some news. Bitcoin speculators in focus as analysts say textbook bottom is underway. Now, I've just shown why I don't think that's right. But there's no catalyst. There's nothing to bring money flowing back in. You know, money's been flowing into AI and into the SpaceX and the other chip makers quietly but consistently. There's nothing really ready to bring that money back in without the Clarity Act and without this war being over and oil potentially heading back up higher. So anyway, analysts flag the Bitcoin moving average derivative Ay, ay, ay. We're not going to look at moving average derivatives. That's drawing at straws, grasping at straws. Let's on the trip. We've already covered what matters to ignore. Like I said, a lot of this trading stuff is knowing what to ignore. Bitcoin quant known as Frank. What could be more credible than a Bitcoin quant named Frank? I'm just sort of making a joke there, but okay, Frank Fetter, never heard of him. Double down conviction, the worst of the price. Well, of course, the worst is over, but it's not over. I don't believe it's over, and so I reserve the right to be wrong, but I have a high conviction we go lower. Okay, so we will kind of look at this here. What this is on the 200-week MA. This is something I've covered, and now generally we will go below the 200-week in a capitulative move to the 300-week. That's the one I cover in that other video. Make sure you watch that, and we've covered it here in class live several times. Q9 on the 200. We're not going to get into derivatives on the MAs. There's many ways to look at this. We've covered the important ones. Keep it simple, everyone. Keep it simple. You don't need to get into this, the SOPRs and the NUPRs and the on-chain extract, the NUPLs, and what is that? Net unrealized profits or position and losses, SOPR, the SOPR, the NUPL, the nipples, whatever they are. Just I forget. It's too much, guys. And so we will avoid all that and just look at some of the charts. But that's why I stopped following on-chain metrics. They're lagging. They're not predictive. They're kind of good for confirmation bias, if nothing else. All right, that's all we're going to do there. But yeah, Bitcoin slides as Iran ceasefire collapses and sees $75 oil on the Hormuz blockade threads. Oh, wow, they're going to block the Strait of Hormuz. Again, big surprise there. I think probably this is us playing Iran at their own game, because this is normally what they do. So we'll then pull out. I don't know. I'm staying out of the Hormuz analysis. Let's see. Lynn Alden says Bitcoin needs no savior. Is that a typo? Maybe we need a new savior. As strategy sells 216, it's not a lot of Bitcoin, everybody. Anyway, Lynn Alden, she or he or whatever, that says there, but 21 market cap. All right. There you go. I will jump out of this here, but Bitcoin slides as Iran ceasefire collapse to see $75 oil towards a crucial 61,000 mark as oil prices soared on the collapse. Yeah, I don't know why 61K is even crucial or impactful. My other screens went off here. Let me pull that up. Bitcoin is at 62,000, but it doesn't look good. And nothing really all that special about 61K. Well, it's the recent swing low bottom, although we went below it. So it's I don't know. Half of these experts, I don't think they know what they're talking about. So yeah, the ceasefire is over. That's what's spooking the market. And I'll just say, guys, we had some nice looking swing trades the last few days, completely nuked by this Iran war and the ceasefire being over. So that's what it is. Can't predict these things. I think we just need to sit out for a bit longer because it's so impossible, so hard to forecast. We had a nice little ceasefire there for a minute, for a red hot minute, but no longer. Also, the latest data, FedWatch, was showing increased odds. We'll pull that up as well. The hike coming in September's meeting. We already looked at that 2 weeks ago. Essentially pricing in a rate hike by the end of the year. Whether it's September, October, November, it's coming, and that's not good for rallying the markets. So this is a big confusing table of nonsense or hard to read, but we'll look at it ourselves in a minute. Michael Vandepop, he's pretty good. Saw him speak at Consensus down in Miami. Bitcoin low of 61K to be tested. You already know my thoughts. I think 50K in the cards. Oil to run higher, NQ to drop further. NQ is a derivative of the NASDAQ. That's Anyway, we'll see his 61K. I don't know why 61K. Let's ignore all that as well. Let's do this while we're on the topic and making good time on the class. We'll go over here into the news and look at the FOMC calendar. There we go. And the FedWatch tool showing exactly what that big obnoxious chart was talking about. This is simpler. This is the CME Grape tool. So basically showing in the upcoming July 29th meeting as a 67% no change. It's 32% of a rate hike. Watch this. We're gonna go a little bit further. So if we head over to September, the 32% jumps to 50%, right? And even a small chance of a half-point rate hike. But this is what we looked at before, and in by October to be at 375, 400. It's about the same, and then but as I think as we got to the end, yeah, I mean the percentage by the end of the year that we stay the same, only 13%. So basically, either a quarter or a half-point rate hike, or even pricing in 3 percentage rate quotes. So they're pricing the possibility of a full point, which would not be good. But let's just look at these. This is 70% chance of a quarter to a half point rate hike by December. So the markets are pricing that in early. I'm sure that's what's happening. So let's get through the news and then we'll look at some other things I want to look at, and the kind of the rainbow chart, fear and greed, and all those things. Strike launches volatility proof Bitcoin, and so Michael Saylor digging in. Look, this should be no surprise. He's selling some Bitcoin. He's got to pay the dividends. He's building the war chest. I believe it's 12 to 18 months of dividend, no matter what. Now, why is that important? What are the chances Bitcoin continues going down for 18 months? Very low, very low. Bear markets, generally 12 months, that's it. So he's doing the smart thing, creating trust and safety. In the old days, there was a guy that I followed, and he's now passed away, but he specialized in raising money. And typically investors raise too little money. So when he would go in, he'd say, we're raising more than enough money, more than enough so that your investment is safe. Okay? You never want to raise the minimum amount as an investor, from investors, because invariably there's unforeseen expenses, additional runway, and the runway extends, and that's what happens. Startups, 95% fail because they run out of money. It's kind of what he's doing here. So volatility-proof Bitcoin loans, this is a little bit different topic. I haven't heard of this yet, but that's been his thesis from the start, being a Bitcoin treasury and loaning against their Bitcoin. Like the banks have been doing for 100 years, but actually not paying us. And so here's a name we haven't seen in a while, Strike CEO Jack Mallers. The cost of eliminating margin calls and forced liquidations is an interest rate as high as 14% and an obligation to pay on time. So let's unpack this. The cost of eliminating margin costs and forced liquidations is an interest rate as high as 14%. I'm not sure what he means by that. I think, that they would have to pay 14% to I don't know, that's a little bit above my pay grade. But the more important part is they have an obligation to pay on time, right? So they are selling some Bitcoin to put in reserve to pay dividends on time. Long-term stability. He's doing the right thing as a business owner, like it or not. And as many times as he said, do not sell your Bitcoin. Guys, he meant it for us, but he has to be responsible to the shareholders and also ensure that the whole thing doesn't implode and the house of cards doesn't fall. So, I'm sure nobody's happy about it, but I think it's obviously the prudent thing to do long term. Okay, Bitcoin Financial Services Strike, which is similar to Stretch under MicroStrategy, a lot of S's, has launched a volatility-proof Bitcoin-backed loan that eliminates margin calls, forced liquidations, only for those who can pay on time and schedule. Oh, I see. Okay, so this is a little bit, I read it differently. They are offering loans to people, Bitcoin loans that eliminates margin calls, so they won't do margin calls or liquidations. I see. I see. So this says that the borrower would pay 14% interest rate, who can pay on time and handle a 14% interest rate. So I got that backwards. The former point is still valid, but this is different. Okay, so Strike. Let's see. Strike is Jack Maller's company. I'm sorry. Yeah, it's confusing. Jack Mallers came out with Strike. They're a payment processor, and I saw him speak at Bitcoin 2021 when they actually had video of him going into a grocery store and buying things with Bitcoin immediately, and various versions of it on the Lightning Network. So Strike is his company, a Bitcoin payments company, now getting into Bitcoin loans. In contrast to Michael Saylor's financial instruments, which are Stretch and Strife is one of them, so I got it confused. They're similar. And there's STRC, STRF. I thought one of Saylor's was also called Strike, though. We'll have to look that up. At any rate, good to hear Jack Mallers back in the news. And so basically, announcement by him offering came in response to broad customer feedback on Strike's first Bitcoin loan product, which launched in May and triggered many liquidations during a time frame. Okay, so that's what it was. So, let's put that on the side. This is all leading toward mass adoption, is what you want to take from that. It's not inherently timely, or meaningful, or actionable right now, but it's interesting and worth holding on to. Maximum loan to value ratio. So what this means is volatility proof loans. So again, you could borrow against your Bitcoin up to 45% with no risk of margin calls or liquidation, as long as you can afford the 14% interest. Not a commercial for them, just trying to explain that. Secret sauce for taking the extra charge that we're giving you guys, putting it on extra hedges in the market to protect all of us. Okay, so they're charging more in interest, basically probably going out and buying derivatives on the other side to ensure that nobody gets in trouble on that. Okay, if you're okay with slightly shorter term loan, higher fee, that no price move that can liquidate you. Look, they're doing this probably amidst all of the fears that MicroStrategy can get liquidated. And the reality is they can't. Unless Bitcoin goes below 5,000, I think. They had taken on a lot of early debt when interest rates were low. And again, back in last cycle, their liquidation was in the $5,000. Bitcoin's not going to 5,000. Spoiler alert. All right, so, but I'll jump off of this in a minute, but Fred Krueger is also smart, says that the loan product could eliminate one of Bitcoin's structural problems, forced selling during market crashes. That's that deleveraging event, right? And so I think in future cycles, we will not see the big capitulative drop because more will adopt this kind of a strategy. But this cycle, it's kind of too late. We still could see... a lot of there may be big players that are highly not highly enough hedged, highly leveraged, that could implode on further drops on Bitcoin's price. Okay, a question came in from Dr. T. Do you know whether we can lend out our Bitcoin? Yeah, you can do that now. You can go to, I think it's Lendl. There's a number of these products. One that starts with an F. Bitcoin. At one point, I put out a report on that. There's Nexo, right? So Nexo is a good one, the Bitcoin lending alternative. Let's just do Bitcoin lending companies. And there's one that starts with an F. I've seen advertised on Pompliano's. That looks pretty good. There's Nexo. Figure is the second one. That's it. And then Ledin. There was BlockFi in the last cycle. I think they blew up, though. I would look into Figure Lending, Nexo, and Ledin. At some point, I have a ranking that we put out to M3 members previously. Okay, let's see. Bitcoin can fall below 50K, one of its cleanest metrics, copies, history. All these pseudo experts just throwing spaghetti at the wall. Right, I've made my case. Go watch the last video on YouTube. Make sure you like and subscribe to that if you guys haven't already, and leave a comment. I would appreciate it. The NUPL, the one I referred to later, it's net unrealized profit and loss or something like that. Who cares? Show me the charts. The new pull is in positive territory, setting it apart from previous bear markets. It's fine. It means we're getting closer, but it doesn't mean we're there. These on-chain metrics are notoriously wrong and bad. And I call your attention to, as you know the story, back in 2021 at the Bitcoin conference, actually 2022, I had a whale pass, and I was in a whale-only session with the editor of Bitcoin Magazine. His name escapes me at the moment, but he did an hour-long presentation with on-chain metrics showing why Bitcoin would not go below $30,000. And at the end of his presentation, I looked around and I said, what would you say to people like me who think we're going below 20,000? And he sort of condescendingly said, well, I've just spent the last hour showing you guys why it won't. And all the whales in the room looked over at me like, who let that guy in here? But I was right, because I had a strong feeling we would go below 30,000, below 20,000, and we did. And I publicly forecast 16.5 as the low 5 months prior in May. And so a little bit of luck, but we nailed it. And I'm sure a lot of the whales had wished they'd listened to me. Point is, on-chain metrics, it's a bit like stargazing and getting your fortune read. There's, or maybe not, it has some meaning, but not timely and actionable. Okay, so take all this with a grain of salt. You guys don't need to go join CryptoQuant and the other one there, it escapes me because I've stopped using it. At any rate, it's a good way to waste a lot of time. The NUPL, look, these are interesting. We're getting close, sure, fine, but it doesn't mean it's time to buy. So we're going to skip over this. You can save. You can thank me later. I don't need to study these at all. So bear market reversal signals copy. Let's see multiple bear market reversals come in on chains. Yeah, there's that on-chain sources. On-chain, let's just call them astrologists. On-chain astrologists, same kind of effectiveness, I would say. Probably more so with the moon phases indicator, I've found to be more accurate than the on-chain metrics. I probably take a lot of flack for that if we put it on the interwebs and the YouTubes. Just for that, we're going to do it because I think I'm right. But at any rate, let's not even go into that. Look at that. So again, a lot of this is knowing what to pay attention to, what to not pay attention to. Okay, last news article here. Bitcoin bulls shake off strategies, $216 million Bitcoin sale. It's a drop in the bucket. Drop in the bucket there. Let's see. Michael, question, do you... no, that was before. Ray, thanks. Thank you for... Okay, sure thing, Dr. T, and thanks, Ray. Bitcoin reverse course from its Monday open sell-off and close. We already know this, and it's not about MicroStrategy selling. It's about a lot of fears over the war. I mean, it's a little bit of both. But here's the thing. People are going to be less sensitive to strategy selling when they realize he sells a couple $100 million here and turns around and buys $1 billion more there, right? So... the climb, this is interesting, on Sunday's climb to 64K was entirely futures driven. Net futures buying reached, let me just get the handy highlighter on there. And let's see, so Bitcoin, Sunday's climb, yeah, that little weekend rally, those are often suspect. Net futures, I don't want to get into futures, etc. And the bigger players will use futures to drive price to here or there, either to trigger liquidations or to ensure that derivatives, like a couple weeks ago, we had a $10 billion options and derivatives futures expiration. And at 60K, was there above and below 60K was where the people would be in profits. People who bought puts would be in the money below and short futures, and then people who bought calls and long futures would be in the money here. So they did a really good job at keeping the price right between them, so the sellers of those derivatives wouldn't have to pay out profits to anyone else. So that's another layer of the onion that you guys should be aware of. All right, because yes, look at net futures buying reached 415 million day on the capped by a single 4-hour burst of 687 million. That's more than Michael Saylor sold, by the way, and these are leverage products. So this is what moves the markets more than Saylor selling. 217 million. That forced closed some of the $33 million bets in against Bitcoin. So we'll just do that in green. Spot flows over the same session were slightly negative. Since the gap matters, since a rally with no cash buyers behind it rests on position that can be forced unwind at any moment. We're getting in the weeds a little bit, you guys, but you don't have to fully understand this other than to realize there's a lot of ropes pulling at the tower, in various directions, and so and if the tower stands or falls depends on these various pulleys and ropes and things. Don't really have a clearer analogy other than it's not clear. And so show me the charts. But Monday's morning unwind, accelerated strategies filing. So it was both. So the morning delivered the unwind on the leverage. It was accelerated by strategies filing to sell 217 million, and now today we have the war fears. So we're waiting on some good news. Markets like good news, don't like bad news. All right, let's not go too deep in the weeds here. We're talking about futures, and those they're clear as mud. It's not an easy way to read those. So, don't ask me to get into all that, because there's funding rates on perpetual futures. There's a number of different things. Show me the charts. All right. With that in mind, let's go through. Let's see, where's liquidations on high block. Let's look at that on another chart. I did want to get into some of these other things. So we talked about the Fed watch. We can get rid of some of these news articles there. And instead, let's do this. We'll jump over into Market Resources, Blockchain Center. And so altcoin season. We are not in altcoin season. Don't need to look at that. The rainbow chart, let's take a look at that just because. Let's see. There's several versions of this. And the original chart, the revised chart, is the one we want. The dynamic rainbow chart. So, guys, we are in the lower range. We are in fire sale mode. I'm not arguing that. But it doesn't mean we can't go lower. And they redraw these from time to time. If we go to the original chart down here, we are below the lowest point in purple, but they're tweaking it. Bitcoin is dead. So clearly they had to revise this. Bitcoin is not dead. The prior rainbow chart, as this is, had it below the purple zone. So they're like, well, we need to revise this a little bit. So basically it's not dead. It's just in its fire sale mode. If it goes lower, then they'll revise the algorithm a little bit. But what is encouraging, though, from here, and let me just move the mouse pointer out of the way because this thing's annoying. Look at the prior cycles. Back here we got above the chart in red. The last cycle we got at the blood orange zone. So we're seeing kind of a diminishing return. So if we only go to this orange range or the light orange range from over here, the range there is this a bubble? Still puts it at 250,000 as the next high. Certainly reasonable. And still works on this rainbow chart because they're saying 2030 it gets to 1 million. Well, that still works if we have diminishing returns in the next cycle and we only get to yellow. The HODL price is 500,000, which is reasonable, and then the next cycle, or maybe get to 1 million, and that's 2032. Who knows, you guys? I think at some point in here we're going to get regulatory clarity and a metric shit ton of money, which is more than a lot, and we get another rip-roaring bull rally up here. Pardon my French. But yeah, I think that happens. The max pain trade generally happens, and so something will catalyze and take everyone off guard, catch everyone off guard, and we'll go up here into this 370,000 range to 500,000 range. Okay? But we're not there yet. All right, let's take a look. Other things that we want to look at here, and so Bitcoin treasuries we don't need. This is the crypto fear and greed index. Probably it's low-ish. It's not an extreme fear. We were in extreme fear last month at 8, and so those are good buying opportunities. At 20, we went from yesterday at 27 to 20 right now. Not really good enough to be a buying opportunity, and so we'll wait and see on that. Let's see. Do we have any news coming up? Let's check out the calendar, and let's just see if we have anything coming up on the U.S. for FOMC. It won't have FOMC for a little bit. On the red cards FOMC meeting minutes, we already was that today? Guys, did I miss there's an FOMC meeting? No, there's just FOMC meeting minutes. I don't know what. The minutes certainly at 2 o'clock, they can move markets. Yeah, no, we didn't have, we had that a while ago. And then Monday we had the ISM PMI, which came in just slightly lower than expected. So but it's not going higher like we need it to. All right, so not much going on there. Well, maybe some news next week. Let's jump on and see. I want to cover a couple things here. We have the CBBI indicator, by the way. This is a confidence at the peak. Clearly, we're not the peak. This is very low. And so we can look at some of the different things here. But look how far away we are from the CBI peak. So, these are other good things to watch when we are peaking. This is back in July of 2025, and then here in September of 24, we were in that red peak zone that was similar to where we were in 2021. But still another, generally this gets way above. And maybe we haven't had the real bull run yet. It just doesn't feel right. And so these are things, there's an outlier, definitely an outlier possibility that's the case. So let's see, we've already covered news, ETF flows. Let's go to Farside Investors and see. Call me crazy, but I think it's probably going to show a lot of outflows on ETFs. And sure enough, it's actually surprising. As of Monday, we had inflows from BlackRock, the BlackRock IBIT, and also yesterday. It looks like today will be negative again, the other funds were selling. Let's take a look while we're here at the Ethereum. These will be outflows too, but I want to get to Solana. Actually, seen some buying last week on the ETF. Not a lot on the Ethereum ETF. And I don't love ETH, so it's kind of the new ADA to me. I think it'll survive. But anyway, nice to see some buying in Solana ETF by BlackRock as well. Slowly buying. Okay, well, that's good news. Let's jump over. What else can we look at here today? I want to look at CoinMarket Crypto Quant. We don't want that. That's getting into all those on-chain metrics and things like MRV. And so there's a time and a place for that. I'm not going to look at it right now. The Glassnode is that other one with the, the MRVC and the NUPL and all that. Don't really care about that. Let's look at Bitcoin liquidation heat map. Actually, is what I want to see, and see, because that can act as a magnet to where price is going to go. So let's jump over to that. Hopefully, this is the one I was looking for, and not the one I was looking for. Where's the heat map? And right, I knew that was going to be the right one. We have market resources, CoinGlass heat map. This is the one. Top look here, liquidation heat map. Boom. Yeah, so, oh jeez, I have to go in here. When did that start to happen? Now they're putting it behind a paywall. Darn it. So, here, let's do this. Sorry, guys. Use this one. And, yeah, that's they're getting greedy here. Go to reset password. Don't need that. Just show me the heat map. Or maybe that's not the one. Darn it. All right, let's find it. So CoinGlass liquidation events, liquidation heat map. That's the one they just made us log into. Crypto Quant, Deribit, Glassnode, liquidations and cryptocurrencies. I want the heat map. Looking at Bitcoin. We already covered that. Bitcoin Cycle Master, Polymarket. Polymarket. Let's look over and see on the percentage chances that the Clarity Act is probably it's below 50%. And let's see. Here it is. There's one in TradingView, cryptocurrency heat map. Hopefully this includes, well, no, you know what? I'm sorry, you guys. This is the overall heat map. We want the liquidity heat map. So crypto liquidation heat map. Let's find a new one. And any questions, you guys? Okay, Adrian have to go. Thanks, everybody. CoinGlass, we'll try that one again. Bitcoin liquidation heat map and TradingView liquidation heat map. So one of these, it's going to probably be working for us. All right, let's see. And there it is on CoinGlass. Maybe I just clicked the wrong one. I had it bookmarked. So there's 3 different models, but we can see price is likely to gravitate toward the 62,400 level. There's a bunch of liquidations there, but there's more down here at below, down at 61,424. Let's see. I'm going to look at a not 24-hour. We'll go to like a 3-day. It'll go to 48-hour. And check the other models. This gives us a wider view of where they are. And so down here, like the trend is clearly down on price. So we have that. Let's look at models 2 and 3. This is not actionable and meaningful. If you've got a run, then you should go. But these are pretty much all similar. There's an equal chance of pushing higher or lower to go to those liquidation levels. So we're trapped. We're trapped between basically 2 identical liquidation levels. Favors the lower side a little bit. It's not strong enough, but at any rate, and we can look at top liquidation events. That's looking back in time too far. The tariffs in China, the AML crackdown, Tesla reversal. This is not useful. So, guys, I'm going to wind things up here. Nothing else to see. We'll take a look at the crypto. Okay, this is good. The total market, the trading view. This is a little bit clearer. And is this up to date though? No, ignore that. That's only through 2023. Okay, guys. Quick look at the charts again, see if anything's changed, and then I'll let you go. We've got Bitcoin down. It's recovering slightly from earlier today, a little bit of a bounce, but I still think this is the most likely move. And not squiggle, but that we roll over and go down. Where it would be invalidated, that's the key question. So if we start to get above, say, 65.5, then we want to pay attention that maybe we can break higher. But as of now, when in doubt, stay out. I'm out of the market entirely, and I recommend doing the same. Not financial advice, for educational purposes only. So thanks, everybody. I'll go ahead and stop the share to give you guys a wave. And we'll see you next week. If you're still here or if you're watching the replay on YouTube, potentially go over to moonstream.io/M3, and you can learn more about this class. I'll go ahead and pull it up for you. Or, just go to moonstream.io/M3. You can learn more about this class. And we meet every week, Wednesday at noon Eastern. And you can also, I give daily updates and coin picks inside of a Signal chat. Do a little bit of a commercial here for you guys so we can get more people in the loop and show you that. So I'll load that up, and then of course you can also work with me one-on-one at moonstreamcoaching.com /start, or just moonstreamcoaching.com. It'll go over here, redirect over here, as I was going to say, and watch a short video from me, and then if you'd like, we can schedule a call with a free portfolio audit and go through that. And I'll let you know how to work one-on-one. The M3 class, again, is moonstream.io/M3, right? And there's me, and then talks about the classes here. You can learn all about that. And the cheat sheets I referenced here, the high-probability cheat sheets, like this one, the Head and Shoulders, right in there. And then, of course, our Signal group. You can see examples of the daily updates here in Signal, right in there, and here, like this, and live calls. And that's what this class is all about. So if you'd like to attend this class live every week, you can sign up for this and daily updates in Signal, and as well as, here it is down at the bottom, daily updates in Signal, as well as this weekly class, and I do coin picks as well. Here is a quick look at the M3 chat, daily updates, coin picks, and videos here. Not like a Discord with thousands of comments every day. It's very much targeted for a daily update in the morning, occasional video update, and trade alerts that I will push out periodically, and even showing my trades here and what my limit sell orders are, like on Lighter. I made great money on Lighter the other day. So that's it, everybody. And then, of course, if you don't have our signals for cryptomastery.org, our trading signals, brand new page, guys, and you need to have these to have an edge. They're better than the RSI, stochastics, and stochastics RSI that are off the shelf. Ours give us an edge. They're the backbone of everything we do and have allowed me to call all three of the last market tops and reversal levels. So go check this out. That's cryptomastery.org. We'll put it on YouTube, and we'll put the links in the description and in the first pin to the first comment. So there you go, guys. That's all I have. Cheers. Talk to you soon. Time to sit tight, trade smart, not often, and preserve capital. And preservation of capital is paramount, so do that. So, all right, guys, take care.